Okay, let's dive into this September housing data for London and St. Thomas. We're doing our deep dive, and right off the bat, seems like there's a pretty big shift happening.
There really is.
Now, before we get too far into the weeds, just want to mention this analysis comes from the experts over at Forest Hill Real Estate, the Distinction branch in London, Ontario. They're a fantastic resource if you're a potential home buyer, seller, or investor.
Absolutely. You can find more from them at www.foresthilldistinction.com.
Right. So our goal today is pretty straightforward. Look at the top-level data, find the key takeaways, and especially focus on the positive shifts in the market. What does it all mean for you?
And the headline here, I think, is really about leverage. The main story for September is that supply, meaning inventory, has jumped up significantly. And that's fundamentally tilting things, more towards buyers.
Leverage, I like that. So let's talk numbers driving that. We saw, what, 17 new listings hit the market in September.
That's right, 701.
Which is up like 13.7% compared to last year. That feels like a lot more choice out there.
It is. And that choice translates into, well, buyer opportunity. We look at the sales to new listings ratio, and it eased down to 31.4% in September.
Okay, 31.4.
Yeah.
And the Canadian Real Estate Association, they say anything under 45% points to a buyer's market, right?
Exactly. So 31.4%, that's pretty firmly in buyer's market territory. It confirms that shift we're talking about.
So what does that actually feel like for someone house hunting? Are bidding wars totally gone, or is it just, less intense?
It means that that real pressure cooker feeling is mostly gone. Buyers aren't feeling forced to make snap decisions out of fear,
Yeah, that makes sense.
And the inventory numbers back this up. We're now looking at 6 months of inventory overall. That's up from 5 months just back in August.
6 months. So homes are sitting a bit longer, giving people time to think, do inspections.
Precisely. More time for due diligence, less rushing.
Now, wasn't there also that Bank of Canada interest rate cut, the first one since March?
Mm.
Did that play much of a role here? It seemed pretty small.
Yeah, it was marginal. I'd say its impact is mostly psychological right now. It's more of a signal maybe that the peak rate environment might be behind us.
Okay. So it encourages those buyers who are kind of waiting on the sidelines, gives them a little nudge.
Exactly. It might just be enough to bring some of that sideline demand back into the conversation, even if the immediate savings aren't huge.
Okay, so buyers definitely have more choice, more leverage. The big question then is pricing. How did all this translate into actual sale prices? Activity itself was steady, right? 534 sales in September.
Yeah, sales volume was quite stable, pretty much on par with what we've seen over the last few years for September. But the pricing, that's where it gets interesting.
How so?
The average sales price dipped. It came in at $623,000 for September.
623.
And importantly, that's down from August's average, which was closer to $651,000. So you are seeing sellers adjusting expectations a bit, reacting to that higher inventory.
But is that average price drop really reflecting affordability, or is it just like fewer high-end homes selling maybe? This is where the HPI comes in, isn't it?
That's exactly right. The average can swing based on the mix of homes sold. The MLS Home Price Index, or HPI, is much better for tracking the value of a typical home over time.
Right, it smooths out those fluctuations.
It does. It helps gauge those underlying value trends, which is key for long-term perspective.
So using that HPI benchmark, what did we see for typical home values in September?
Well, the overall LSTAR composite HPI benchmark price was $562,000. That was down about 1.8% from the previous month.
Okay, a slight dip. And for specific types, like single-family homes.
For single-family homes, the HPI benchmark was $611,000. And for two-story homes, it sat at $663,000.
So values are softening a bit across the board, but it's not some dramatic plunge. It's more orderly.
Exactly. A systematic softening, reflecting the shift in market balance, not wild swings.
Okay, so wrapping this up, the main takeaway for anyone listening seems clear, that increased inventory is creating more selection, probably more stability, and definitely more leverage for buyers than we've seen in a while.
The momentum has shifted, yes. It's favoring buyers right now.
It feels like a healthier market, maybe.
It could be seen that way, yes.
We'll leave it there for this deep dive. See you next time.